Welcome, and thanks for joining my webinar. This is an excellent opportunity for you to get to know us, EG indicators, and our products. I really appreciate your time, and I recommend you staying until the end because there's a special offer for you. Now we're ready to start. The agenda for today, I'll talk a little bit about us, the founders of EG indicators, and then I'll deep dive into the EG price action bot. I'll show introduction and technical details and statistics. Q&A, of course, questions and answers, and special offer. And I'll start with a risk disclosure. Trading is risky and not for everyone. Past results do not guarantee anything about future results. And now, let's start with a short slogan, my favorite one.
EG customers are the only ones getting the EG trigger points 10 hours before the market reaches them. CL, the oil future.
NQ, the Nasdaq future.
GC, the gold future.
RTY, Russell 2000.
Dow Jones and S&P 500. EG indicators. Because of the accuracy. Because of the simplicity. Enhance your trading experience with EG indicators.
Combining with Renko bars.
Combining with price action.
Scalp and manage your risk using the accelerometer.
Use the dynamic Fibonacci to estimate your profit targets.
Use the EG automatic strategies to explore your trading style.
Subscribe today. EG indicators.
Thank you. About the founders, me, Dr. Efrat Levy, and Han Greenberg, we are computer and data scientists and day traders. About me, computer scientist and AI expert with over 15 years of applied research experience in the high-tech industry. And I have background in cybersecurity and machine learning, 10 patents and academic papers. Academic degrees in software engineering and computer science, quantum computing. Before deep diving into the EG price action bot, I'd like to briefly introduce a quick overview of the EG trigger point. The EG trigger point is our core product. It presents significant price levels, the levels that you see here. And these levels are delivered daily to our customers. And the reason they are delivered daily is because they are calculated by an AI engine we developed running on a cloud, utilizing historical and correlated market data. And this AI engine consumes heavy computational resources. So as part of our unique service, we update our customers with the output, the daily insights of this AI engine. And we call them trigger points. And they act as support and resistance levels. Okay, we expect more aggressive buyers at the trigger point support levels and aggressive sellers at resistance levels. Therefore, traders may consider these green levels as buying opportunities and the red levels as selling opportunities. When the daily levels are delivered to our customers, the market moves between the dashed lines that you see here, sub-zero and res zero. EG customers are the only ones getting the EG trigger point 10 hours before the market reaches them. And this slogan points to the fact that the trigger point is a leading indicator, meaning that these significant price levels are delivered before the market reaches them. Now, I want to put it on the side for a moment and focus on leading indicators. Leading indicators are essential for successful trading. Leading indicators are price and volume. Both are used by traders for real-time analysis of the market. Besides real-time analysis, we need historical-based analysis also. Indicators belong to this family are support and resistance, but not intraday. Remember, the EG trigger point is only based on historical data, not lagging, leading. So again, considering real-time analysis, price action, volume, considering historical-based analysis, the trigger point, the EG trigger point. All of them are leading indicators. Now, let's get back to the EG trigger point that presents significant price levels based on history analysis, remember? With high probability for the market to react. And this leads me to a simple rule called first touch. Statistically, we have found that when the market reaches these levels for the first time during the current trading day, it tends to bounce back. As you can see here, even sometimes on CPI news. Sometimes the market gives us a small bite, but sometimes even more than that, large moves. So first touch rule is basically used in reversal strategy, meaning that in first touch rule, the red levels are short opportunities and the green ones are long opportunities. So to conclude, the EG trigger point presents us points of interest. This means that we expect the market's behavior to be less random than other price points. And remember, guys, it's all about statistics. So how can we reduce bad entries while considering reversal strategies? And this brings me to the market accelerometer that we developed specifically to help detecting possible line breakouts. How? It reveals the driving force behind the price movement of an asset. It measures the mathematical derivative, the change of the asset's volatility, and can be helpful for reducing bad entries on first touch rule in real time, as we spoke earlier, reversal trade. So we had the EG trigger point that presents points of interest, and we discussed the first touch rule. And then we moved on to the market accelerometer that can be used to detect breakouts. Statistically, the market tends to bounce when reaches these levels for the first time during the current trading day. However, they may be broken, and some traders prefer to wait for a price action indication as a final confirmation and to time their position entries, what we call in trading confluence. And for this, we developed the price action indicator. To give a little bit of more confluence. And to do so, it analyzes the candle patterns when the market reaches the area around the trigger points and only the areas around the trigger points. And then it generates signals accordingly, arrows presented on your chart and sound notification. As you can see here, it identifies the pin candle and generates the short signal up here and the long signal down here. To summarize, we saw the trigger point, the levels, the market accelerometer that alerts on possible line breakups, and the price action indicator that analyzes the candle patterns around the trigger points to set as entry confirmations. And it generates entry signals, as you can see here, the arrows surrounded by the white circles here. So what is the price action bot? First of all, it's a fully automatic strategy developed for the NinjaTrader 8 platform. And it was developed to demonstrate the potential return of trading using the trigger point, the daily level, combined with the signals generated by the price action indicator, aims at analyzing the market behavior by looking at the candle patterns created around the trigger points. So it utilizes the EG trigger point for position entries, and it implements two types of strategies: the first touch rule, reversal strategies, and price action signals. And it's an exploration tool. It implements different types of position management. And remember, guys, it trades based on leading indicators. And I created a few examples for you. And now it's a good time for you to ask questions on the chat. Main properties of the price action bot. On NinjaTrader, if you go to the properties, you can see the following. Position, price action, turbo, first touch, and other parameters. Regarding the price action property, since there are several types of price action, we implemented 3 of them. And you can pick the type that you want the bot to trade given. For example, it can be engulfing pattern or pin candle or all of the 3 types implemented. Regarding the turbo property, this refers to adding more contracts to a winning position, meaning that during an active position, if another price action signal is generated by the price action indicator, the bot adds another contract. It can place the additional contract whether using a pending order on the level or market order. Regarding the first touch rule policy, remember reversal trading. There are several options. You can completely disable it, meaning that the bot only trades given price action signals. Only price action signals, no first touch rule. Or you can allow once, meaning that at the first touch of the level, it trades the signal, the reversal strategy. Or you can allow with re-entering, meaning that you re-enter until the level is broken. And regarding the position section, you need to mention the number of contracts to trade with. Stop loss per instrument, I use the default. Risk reward ratio, I also use the default. Entering position by, whether by a pending order or by a market order. Remember, the bot trades around the trigger points. So pending order necessarily means that the order is placed on a trigger point level. Market order means that given a price action signal, it can be far from the level, it enters by a market order. If you pick the pending order, for how long it should be placed until cancelled, if not filled. And you can pick the trailing stop. The differences relate to the volatility of the asset. And recently we added the EG trailing stop that now the bot implements as well. And you can only enable a certain direction if you want. You can allow both long and short or only one. If you want the bot to be biased to this direction, whether biased to long or biased to short. By the way, in our mentoring program, we teach how to utilize pre-market analysis to choose the bias, the correct bias, if any. In other words, how to utilize historical based indicators to decide on the bias for today, if any, and then you can set it on the bot. Reach out to us to learn more details about the EG Trader Mentoring Program. Now, I want to show you how I utilize the price action bot to explore my strategies. So this is my computer, and this is my NinjaTrader 8 platform. So to use the price action bot for exploration, first you need to download historical market data. And you do it by going to connection, and you need a connection to a broker. It can be also a prop firm. So you're going to connection to historical data, and you need to pick specific date where you want to download the market data for analyzing. So in this case, I picked October 9th, and you need to pick the instrument. In this case, I picked the NQ. And after you choose date and instrument, you can press the download button, and the historical market data for market replay is being downloaded to your computer. And now you can go to that day that you downloaded. And now you can play the data, the playback, the market replay. And now you can see the price movement. You can speed it up and speed it down back. The time zone that you see here is a European GMT plus 2 or 3. Now I stop the market replay. And now, remember, I want to attach the trigger point, the levels associated with October 9th. So I import the trigger point into the NinjaTrader 8 plan to present the levels on my chart to let the bot trade with. And I'm going to indicator after I imported the daily levels. I'm going to indicators, and this is the trigger point, and the date is October 9th. And here are the levels. Because it's 1 minute time frame, you need to scroll on the right to see the trigger point levels associated with October 9th. Now, I want to attach previous day levels, 1 day previous. And these are the golden levels that you see here. So right now, current day's levels are attached to my chart, the green and the red lines, and the golden lines. The bot and the price action indicator were implemented to detect the trigger point levels attached to your chart automatically. You don't need to manually provide it with the levels. Now, when I attach the price action bot to trade on this chart, it automatically detects all the levels, including the golden levels, attached to my chart. Regarding the stop loss, I'm picking technical-based trailing stop loss. It's called Tech Trailing 3 here. And first touch policy is enabled. Allow with re-enter. As long as the level was not broken, the bot can trade reversal on this level. And now I enable the bot and it's ready to run. So I play the market replay, play the market data, and see how the price moves. And I expect when the market reaches the area of the levels above, it's short, and all the levels below will be used for long positions. Okay, again, since the first touch rule is enabled, each time the market reaches the levels, it automatically trades reversal. All the levels below the price when the bot was started, all the levels below are considered as support, and all the levels above are resistance. I can see more and more questions are coming, and they'll be all answered shortly. When a level is broken and the first touch rule is no longer valid, then the bot moves to trade price action signals. And the price action signals can be identified by arrows presented on the chart. Here is the arrow, the red one. And the pending order did not fill. And there was a false signal, short signal, and then a long signal. And another long signal that did not fill because we trade using a pending order and the market didn't come to retest the level. But there are many other opportunities, as you can see. And this is the end of the day, the end of the futures trading day. And now I'm going back and I'm going to change a few properties on the bot. So I'm going back with the market replay and I'm attaching the price action bot again. But now what I'm doing is picking another stop loss type. Instead of tech trailing 3, I want to use the new EG indicator for trailing. It's called the EG trailing stop. And it is based on ATR, average true range. It's a good measure for the volatility of the asset. And it makes sense to trail the stop loss based on that volatility. And this is the ATR trailing. The ATR trailing implemented by the bot is the EG trailing stop. Also, I enabled turbo with market. Remember, meaning that if there's another price action signal during an active position, the bot adds with a market order another contract to that winning position. Now you can see the lines surrounding the market price are the ATR trailing lines. And you'll see in a minute when the bot enters a trade, it trails the stop loss given these lines. You will see in a minute how it performs. You can see how the stop loss is being trailed using the EG trailing stop. It helps maximizing the profit. And this is the first touch rule, remember, and the trailing is being follows the ATR trading. And now, pay attention. There was another long signal by the price action, and the bot added another contract to this winning position. And now it trades the stop loss. and another contract to the short position. This is the turbo mode. It shorted the first touch rule on raise 5, and then price action short signal was generated, and the bot added another contract by market order to this winning position. And look how beautifully the ATR helps maximizing the profit. Beautiful. And another order that did not fill. But again, there are many other opportunities, as you can see. And this is the end of the day, the end of the trading day. So we saw that using the EG trading stop, the bot could maximize its profit. And using the principle of adding more contracts, this is the trailing stop, an example on the RCY. I'd like to thank you for participating in my webinar. Thanks for your time. I hope to see you soon again.